Okay, let's get started. Subcommittee on National Security, Illicit Finance, and International Financial Institutions will come to order. Without objection, the chair is authorized to declare recess of the committee at any time. This hearing is entitled International Financial Institutions in an Area of Great Power Competition. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I now recognize myself for 4 minutes to give an opening statement. First, thank you to our witnesses. For being here today. You offer a wide and deep expertise on international financial institutions and global economics, and we look forward to your insights. Over the past year, in an effort to rein in the decades-high levels of inflation sparked by the reckless government spending, central banks shifted from a prolonged period of extraordinary monetary policy ease to one of aggressive monetary tightening. The Reserve, the European Central Bank, and the Bank of England all increased interest rates at the fastest pace in decades, while also withdrawing liquidity by not rolling over a meaningful part of their large bond portfolios. One consequence has been that 60% of low-income countries now face debt distress, meaning that there is a risk they may be unable to meet their financial obligations without debt restructuring or debt forgiveness, especially as global economic growth slows. This perilous international economic situation makes today's hearing especially timely and relevant. The international financial institutions were established after the Second World War to address global economic challenges, both to help cultivate economic growth and, in the case of the IMF, be the world's financial crisis firefighter. However, many now question whether these organizations remain up to or even focused on their core responsibilities. There are 2 major reasons for this. First, China has played a growing and uncoordinated role, providing funding far beyond what could be provided by traditional sources for white elephant projects that sink countries into debt traps. At least 65 countries owe China lenders more than 10% of their external debt. When countries enter financial distress, these large levels of opaque Chinese debt impede restructuring attempts, as the Chinese refusal to cooperate in the process leads to fears that any support will just flow to Chinese creditors rather than helping to resolve the borrowing nation's economic crisis. Ironically, at the same time, the World Bank continues to loan China more than $1 billion annually, and China remains one of the bank's largest debtors. China is also by far the largest beneficiary of World Bank spending. The GAO recently released a study entitled World Bank, Borrower Countries' Contracts to Businesses in U.S. and to Entities Potentially on U.S. Sanctions or Other Lists of Concern. That's a mouthful. Which I would like to ask unanimous consent to submit for the record, right here. The study found that between 2017 and 2021, Chinese companies won about 29% of all World Bank contract dollars. The second reason for concern without the IMF for the IFI's fitness is that these institutions are increasingly diverging from their traditional development agenda to impose Western elites' green agenda on the developing global South. Nowhere is that neocolonial effort more clear than in the vital area of energy, where institutions like the World Bank will fund neither nuclear power, the cleanest, most productive zero-emission source, nor natural gas, the incremental improvement from coal or wood that allowed our country to reduce emissions more than any other country in the world. This, even as the European nations scour the African continent for alternatives to Russian gas for themselves, while hypocritically denying these very countries financing for our natural gas projects. In the meantime, because developing nations are demanding nuclear, gas, and mining projects that the bank sanctimoniously refuses to consider, Russia and China fill the gap, setting standards and establishing long-term relationships, even as the European countries and the Biden administration pat themselves on the back for their own green purity. In its budget request for fiscal year 2024, the Biden administration sought a 70% increase for IFIs, largely to fund this counterproductive green agenda. This Congress needs to take a hard look at how such an investment would possibly help hardworking American taxpayers, whether it would instead help Russia or China. The chair now recognizes the chairman of the Subcommittee on National Security, Illicit Finance, International Institutions, the gentlewoman from Ohio, Ms. Beatty, for 4 minutes for an opening statement.
Thank you, Mr. Chairman, and thank you to the witnesses. Today, we are here to discuss the critical role of international financial institutions in the global economy and the increasingly large role that China is playing as a global lender to supplant U.S. leadership. And certainly, we know IFIs are in an era of great power competition. IFIs, including the International Monetary Fund, the World Bank, and multilateral development banks, are essential to provide financial assistance to countries in crises. support social and economic development around the world, and promote United States economic and foreign policy goals. In recent years, IFIs have been particularly instrumental in helping developing countries respond to the global pandemic, COVID-19, providing vital aid to Ukraine in face of its war with Russia and addressing the economic implications of climate change. While the United States remain a strong leader in the IFIs, other countries, particularly China and Russia, seek to supplant U.S. leadership and reshape international order. China Belt and Road Initiative, designed to craft a China-controlled global infrastructure, strategically seeks to lend and invest in developing countries to spread Chinese influence. To this end, China launched its own multilateral development bank, an Asian Infrastructure Investment Bank. These loans and investments come with strings and conditions that allow Chinese influence to become entrenched in borrowing country, from adoption of Chinese labor practices to the use of China's central bank digital currency. Through its obscure lending practices and unwillingness to restructure loans in line with global norms, China has been pushing countries into unsustainable debt. Now more than ever, it is critical for the IMF and other IFIs to have the resources they need to support low-income, at-risk countries so they don't turn to China for funding. That is why I can't fathom efforts by my colleagues across the aisle to hamstring and weaken the IMF when this institution is essential to countering China's influence around the world. To make matters worse, the United States may default on its debt for the first time in history as soon as a few days. There is no doubt that such unpredicted blow to the United States economy would deliver a decisive victory to China, collapsing the U.S. Treasury's market and catastrophically damaging our creditworthiness and credibility as a global leader. My colleagues on the other side claim to prioritize the economic threat posed by China, which I agree should be a priority, and yet their actions on default undermine that very goal, destroying the American economy and Americans' credit, holding the payment of past bills hostage to railroad future spending cuts, unquestionably weakens America's ability to compete and continue as a great power. Meanwhile, committee Democrats in the Biden administration have led the charge to funding the IFIs and enacting legislative measures to protect and promote United States competition on the global stage. For example, from the CHIPS and Science Act to the American Competes Act. So I remain committed to continuing this vital work, preserving the United States standing as a great power in the global economy. I want to thank our witnesses for appearing today to discuss this important matter, and I'm hoping that my voice holds up. So please excuse it, and I look forward to your testimony today. Thank you, and I yield back.
We have 1 minute reserved for the chairman as well as the ranking member. The chairman doesn't appear to be here at this time, so with this, we will recognize the ranking member of the full committee, the gentlelady from California, Ms. Waters.
Chairman Lukemeyer and Ranking Member Beatty, I thank you for holding this hearing on international financial institutions, the great power competition, and how to best manage international programs to counter China's global ambitions. It is shockingly hypocritical, then, that we sit here on the last day that the House was supposed to be in session for the month, just days before Republicans run America's economy off the debt cliff. And why? At least one stated reason is so they can cut the programs and institutions like the World Bank and other institutions. I don't know if the IMF is included in that, but however, this discussion today, I hope, will focus on not cutting anything in this government that has to do with us dealing with China and other concerns that we may have about how they're undermining not only our economy, but absolutely causing disaster in the world. I yield back the balance of my time.
Janelini yields back what time she didn't have. With that, we need to get a couple housekeeping things out of the way. First, French Hill, who is not a member of the subcommittee, is going to join us shortly and will be able to ask questions at the end of the discussion. We are going to have votes today, and right in the middle of our discussions here, so sometime between 9:45 and 10 o'clock. So we'll adjourn for a short period of time to go do our constitutional duty to vote on a bunch of bills this morning. We'll return and finish at that time, so you gentlemen will be able to go to the restroom, find something to drink, get a little nap, whatever it takes to keep you going for the rest of the morning. Also, with regards to your microphones, please, those things move. Please pull them as close to as you can. Some of them are very sensitive or not sensitive from the standpoint you need to get it close to you to be able to hear. When you become when you're at my advanced age, it's difficult to hear a lot of things. So I like to be able to hear everything you said and are going to tell us today. So please get those microphones close to you. Just take a bite out of it if you want to. That would be great. Okay, with that, we'll welcome our guests this morning. Dr. Jesse Schriger is an associate professor of macroeconomics in the economics division at Columbia Business School. Welcome. Mark Rosen, Mr. Rosen, a partner at Advection Growth Capital and former acting executive director of the IMF. Welcome, Mr. Rosen. Daniel Rundy. Mr. Rundy is Senior Vice President at Center for Strategic and International Studies. Welcome to you, Mr. Rundy. Rich Powell. Mr. Powell is the Chief Executive Officer of ClearPath and ClearPath Action. Welcome to you, Mr. Powell. And Dr. Sam Ben. I'm sure we're all going to get his name wrong, so we apologize before, but hopefully that's pretty close. And with a name like Luke Tamar, I'm used to being called all sorts of things, so it doesn't bother me. Hope it doesn't bother you. But Mr. Sam Ben is a distinguished non-resident fellow and chief executive officer at AfroCatalyst. We thank each of you taking time to be here today. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony. Without objection, each of your written statements will be part of the record. I control the time with my gavel, so if you start here, that means it's close to time to stop. On your desk in front of you, you should have a timer. When you see the yellow button, kind of wrap it up. See the red button, means you're going to get gavelled out. So with that, Dr. Sugar, you're first this morning. You're recognized for 5 minutes. Please turn your microphone on, please. Thank you.
So Chairman Lukemeyer, Ranking Member Beatty, and members of the subcommittee, thank you very much for the opportunity to testify today. I'm Jesse Schrager, the class of 1967 associate professor at Columbia Business School and a founding co-director of the Global Capital Allocation Project. The international financial institutions currently face a significant challenge in the form of ongoing sovereign debt restructurings and countries on the verge of debt crises. Addressing sovereign debt crises and many other issues in the international financial system starts with an understanding of who owns what and who owes what to whom. At its core, a sovereign debt crisis arises when a debtor country is unable or possibly unwilling to meet the contractual value of its obligations. In such a crisis, the task at hand is to figure out how much a debtor is willing and able to repay its creditors, and then coordinate an agreement among the creditors to split the losses. This has always been a challenging problem since sovereign debt lacks the type of seniority structures or bankruptcy procedures that facilitate the resolution of corporate defaults. The difficulty of resolving a sovereign debt crisis is further compounded when creditors have differing objectives, especially when we lack a clear understanding of who the creditors even are. Today's debt challenges have many parallels with those of recent decades. In particular, the countries currently facing debt distress have largely borrowed from foreign creditors in US dollars and other foreign currencies that they do not control. This has left them vulnerable to external shocks, such as the rise in commodity and energy prices following Russia's invasion of Ukraine and the sharp recent increase in US interest rates. As their currencies lost value, these countries found it increasingly more difficult to repay their debt. As in previous sovereign debt crises, a successful resolution today will involve significant write-downs and losses by creditors, as well as additional lending from the International Monetary Fund. So in this sense, what's happening today looks like the past, but let me now turn to what is different about the world's debt situation. One key difference is that the largest emerging markets are generally not included among the list of countries in debt distress. Instead, debt problems are primarily concentrated in lower-income countries. One important reason why is that major emerging markets now largely borrow from foreign private investors in their own local currency. This means that even if their currencies lose value against the dollar, they don't see their required repayments increase nearly as much. This is a major improvement in the resilience of the international financial system. So, as the US and the other G7 countries consider scaling up lending from the multilateral development banks for infrastructure and other projects, it's important to do so in a way that helps low-income borrowers avoid dangerous currency mismatch as much as possible. The second difference today is the role of China as a global creditor to low-income countries. China is now the largest bilateral creditor in the world, and for some countries, debt from China alone can exceed a quarter or even half of their GDP. I want to highlight some challenges this raises. First, and related to my previous point, almost all of this lending from China is in foreign currency, and it's actually overwhelmingly in US dollars. Second, China's style of lending via its state-controlled policy banks positions it between conventional international private creditors, like bond investors, and other official bilateral government lenders. This has led to significant disagreement about how China should be treated in sovereign debt restructurings and is leading to costly delays. Third, there's uncertainty about just how much money is owed to China. China does not participate in traditional creditor reporting systems, and it tends to include non-disclosure clauses in its loans that prevent borrowers from revealing the terms. Fourth, some of the Chinese loans require borrowers to keep cash in offshore escrow accounts as collateral. This makes other creditors worry that China will be treated as the senior creditor in default if they can seize assets before formal debt restructuring negotiations even begin. Adapting the world of sovereign debt to reflect China's new role begins with a systematic understanding of the true nature of these exposures. The final challenge to the international financial institutions that I want to highlight is how tax havens and other offshore financial centers make it harder to know who owns what around the world. Because global financial statistics are according to the immediate location of an investor or borrower, countries around the world don't even know where their money goes to or comes from. Let me give you an example. In 2019 and 2020, nearly $3 trillion of investment in stocks and bonds recorded as officially going to tax havens like the Cayman Islands and British Virgin Islands were actually going to Chinese firms. Closer to home, our official statistics report that our third and fourth largest portfolio investors are the Cayman Islands and Luxembourg. This means that we really don't even know who our ultimate creditors are. The problem is even worse around the world, where investment statistics lag behind what we have in the United States. The international financial institutions can play a unique role coordinating global efforts to look through tax havens and uncover the true pattern of global capital allocation. Knowing who owns what will allow the world to resolve future debt crises more effectively and efficiently. Thank you very much for the opportunity, and I look forward to your questions.
Thank you for that, Dr. Sugar. Mr. Wilson, you're recognized for 5 minutes.
Good morning, Chairman Lukemeyer, Ranking Member Beatty, and members of the Financial Services Subcommittee. Thank you for inviting me to speak with you today. I'm here to testify on matters relating to the IMF, where I served as acting United States Executive Director between 2019 and 21. Prior to being nominated by President Trump as his representative to the IMF, I was an investment banker for nearly 4 decades, most recently as head of Latin American investment banking and later chairman of that division at Bank of America. Firstly, a quick summary of the fund's core mission. The IMF is the global lender of last resort to countries that are in economic distress. IMF borrowers usually have a balance of payments problem, are running out of foreign exchange reserves, and so cannot meet their obligations. The IMF negotiates a set of economic policies with the borrowing government to alleviate the crisis, and conditional on the government implementing the agreed policies, provides a loan in tranches, normally over a 3-year period. Along with providing capacity development to countries and monitoring their economic performance, these are the key functions of the IMF. I would strongly recommend that this committee press the IMF to stick to these core functions and not to move into ancillary areas such as development lending or climate change lending or policies which have long time horizons far beyond the crisis focus of the fund. It's for development banks and most importantly the private sector to invest in these longer term issues and challenges, not the IMF. Secondly, the biggest challenge that the IMF faces today is China, which, as we've heard, has lent vast sums to emerging market and low-income countries in a non-transparent and irresponsible manner. Many IMF members are now struggling to repay China. The Paris Club of countries, of which the US is a member, acts responsibly in providing debt relief to these countries. But China's refused to join the Paris Club, and as we've heard earlier, has on numerous occasions also blocked or delayed debt restructurings among its debtors. The US and its allies need to continue to call out China and insist that it provides debt relief to these poorest countries in the same way the US and other members of the Paris Club agree to do so. And a stronger application of the IMF's lending into arrears policies in cases where China refuses to cooperate could be helpful in this regard. Another issue facing the IMF is the question of its ownership or quota. The United States is the largest shareholder in the IMF and has veto power over certain key decisions. And it's critical that the US continues to maintain its ownership at more than 15%, which enables it to have this veto power. China, for some time, has been pressing for an increased quota share at the IMF. However, given its irresponsible lending and unwillingness to provide debt relief to developing countries, this is not the time to reward China with increased ownership at the fund. Two other issues I'd like to focus on are anti-corruption and the catalytic role of the private sector in the work of the IMF. Corruption is a severe problem for many emerging market countries which do not have strong institutions that can confront and root out corruption. The IMF is certainly doing a much better job than it did historically on anti-corruption, but I believe it's critical that it continues to make anti-corruption laws and policies front and center in the conditions of its lending programs, as well as a focus of its technical assistance. Only by reducing corruption will many of these countries be able to attract the vast amount of private sector investment which is potentially available and remains the ultimate key to reducing poverty. Establishing a rule of law, including laws to protect private property, is key to unlocking this investment. And it should be a focus of the IMF and World Bank to encourage these countries to improve the rule of law and to fight corruption. If they do that, emerging market countries can attract private capital and grow rapidly, as many countries that have followed that path have already done so successfully. In conclusion, Mr. Chairman, my recommendations to this committee are for the IMF to stick to its core mandate and not stray into areas which require long-term solutions where other institutions are better suited to tackling these challenges, for the US to retain its veto at the fund, for the IMF and its member countries led by the US to insist that China provides debt relief to poor countries where it's overburdened them with irresponsible lending, and that the IMF makes anti-corruption and the catalytic role of the private sector in growth key parts of its conditionality in lending and technical assistance. Thank you, Mr. Chairman. I look forward to any questions the committee may have.
Thank you, Mr. Rosen. Good job. Mr. Rundy, you're recognized for 5 minutes.
Chairman Luke DeMeyer, Ranking Member Beatty, and distinguished members of the committee, thank you. My main message is this. In this era of great power competition, if we do not meet the hopes and aspirations of developing countries, they're going to take their business to Russia, China, and others. We can't fight something with nothing. Multilateral development banks, MDBs, under US and Western leadership are one way that we can respond with something. The United States built and strengthened the MDB system. MDBs provide money, advice, data, and convening power to help developing countries solve problems. If the US exerts its influence over these institutions, they are force multipliers of a US-led global system. If we disregard our leadership role, then other actors, including China, can exert influence over them. The World Bank Group is a series of institutions. It lends money to national governments, it has a private sector arm, it has an insurance arm. There are a series of other regional development banks, including the Inter-American Development Bank, the Asian Development Bank. Taiwan is a member of the Asian Development Bank, the African Development Bank, and the EBRD, the European Bank for Reconstruction and Development Bank, focused mainly on countries that used to be behind the Iron Curtain. The United States has been instrumental in creating the majority of these institutions and remains the largest or one of the largest shareholders of every aforementioned MDB. Since the founding of these institutions, the U.S. has used its shareholding power to shape the policies and activities of MDBs in indirect support of American foreign policy. The United States executive and congressional branches share control and responsibility for the United States policy towards the MDBs. There's been some talk about potential capital increases for some regional development banks. A capital increase is when an MDB increases the amount that it can lend through an increase in the bank's capital through one-time additional contributions from the U.S. and other shareholders. Congress has a voice and a vote in capital increases. The IDB and the EBRD may need capital increases. I'm in favor of that under certain circumstances. In the case of the EBRD, the Congress should only consider a capital increase if the EBRD agrees to use all additional monies generated to help the financing the reconstruction of Ukraine. How should we think about these institutions in the context of emerging market debt crises? Well, the MDBs play a number of roles in this, in the sense of responding to, they're a convener, they're a data collector, and they have a role to play in terms of any future debt deals. China is now a big part of the emerging markets debt problem. What role does China play in the MDBs? They're a shareholder. China continues to borrow from the World Bank and the Asian Development Bank. That is crazy. That needs to stop. China, as a shareholder, also has Chinese firms can bid on MDB projects. China wins a lot of, in terms of dollar value, a lot of the dollar value of World Bank contracts. Something to take a look at. How does the Belt and Road figure into the MDBs? You all have heard of the Belt and Road. Infrastructure is now a strategic issue. China's Belt and Road Initiative is a combination of construction and financing projects for roads, airports, and energy around the world. Unfortunately for us, BRI is an ambitious project that speaks to the hopes of China's friends and potential friends. To counter the BRI, the U.S. needs a positive alternative that says more than, don't work with China, right? That's not a strategy. We've got to have an alternative. What is the role of MDBs as stewards of environmental protection? Well, under the Paris Agreement of 2015, each signatory had to file a national climate action plan. If these plans include oil and gas infrastructure, then the MDBs should support oil and gas infrastructure. MDBs also need to do more in mining and minerals. To achieve a carbon transition, we're going to have to produce 40 times the amount of cobalt and lithium. MDBs would rather have a root canal than work on mining and minerals. They'd rather not deal with it. If the administration comes to Congress for a capital increase for the MDBs, Congress should condition new capital increases on the revision to U.S. policy opposing support for oil and gas projects. I have several recommendations. First, the U.S. needs to ensure these institutions remain a force multiplier of a Western form of development. Second, mobilizing private investment should be a central focus of the MDBs. Third, MDBs should largely respond to client-driven demands. Fourth, the World Bank needs a much closer alignment with regional development banks. Fifth, these institutions need a more credible graduation policy for middle-income countries. And finally, any future capital increase for regional development banks should consider Taiwan joining as an economy.
Clear path. We advance policies that reduce and remove global energy emissions. When I last spoke with this committee in 2019, the world's energy and climate landscape looked very different. Since then, COVID disruptions, Russia's savage invasion of Ukraine, growing tensions with China, unprecedented energy investments, and waves of extreme weather have shown that more energy and emissions know no borders. This committee can ensure financing to the developing world for clean technologies like advanced nuclear, particularly through the IFIs. I'll cover 4 topics today. First, the importance of nuclear energy and the latest American innovations. Second, our global competitors, particularly China and Russia. Third, the potential and challenges for IFIs in nuclear projects. And fourth, the importance of a parallel U.S. XM and DFC strategy for nuclear exports. An increase in demand for reliable, clean electricity has U.S. utilities calling for doubling our nuclear fleet by 2050. Military, big tech, and heavy industrial users are exploring a variety of advanced designs. There are 15 reactor concepts applying to the U.S. Nuclear Regulatory Commission. And today, at least 8 U.S.-based companies have publicly announced international partnerships to explore deployment in more than 10 countries. These partnerships could last a century, from construction through decommissioning. That said, the U.S. has lost market leadership to intense global competition for nuclear projects. In the last 5 years, Russian and Chinese state-owned firms captured 87% of all new construction starts globally. Today, China is building more than anyone, with 55 operable reactors, 23 under construction, dozens more in the pipeline, and a policy to go global through the Belt and Road Initiative. And it's not just the reactors. The U.S. is also vulnerable in nuclear fuel. By 2030, China and Russia could control 63% of global uranium enrichment capacity. There's more. From 2016 to 2021, China provided more energy project financing globally than all major multilateral development banks combined. Rapidly developing countries are looking for reliable, low-emissions power, but mainly, they're going with what's cheap. IFIs can and should play a bigger role in providing an alternative. Yet institutions like the World Bank have been slow to respond to the needs of these countries and even have a self-imposed ban on supporting nuclear projects, having not supported a single nuclear project in the past 60 years. As two of ClearPath's advisors noted in a recent foreign affairs piece, an Egyptian presidential advisor told us and a group of U.S. Republican lawmakers at COP27 last year, countries like hers want dependable energy and supportive financing. They would welcome U.S. investments, but we haven't been showing up to meet that demand. That's why Egypt instead took a loan from Rosatom and Russia for its new nuclear plant and is now locked into that relationship for the foreseeable future. Chairman McHenry's International Nuclear Financing Act would direct leadership at the World Bank and U.S. representatives at other IFIs to push for nuclear projects. Even if the bank and other IFIs removed their ban on nuclear financing tomorrow, it's not guaranteed we'd see more U.S. nuclear projects abroad. For instance, a recent study by the GAO found that Chinese-based companies received 1/3 of World Bank-funded international contracts over the past decade. Still, China remains eligible to borrow from the bank for its own development programs. Russia also remains the 8th largest shareholder for one of the bank's key lending facilities. As we consider pressing the bank and other IFIs to be more proactive on clean energy, particularly nuclear, we need to improve America's own export financing. One example, our recent successes in Poland. The Trump administration began these negotiations, and in 2022, this administration proposed a financing package. Poland chose Westinghouse's AP 1000 in a deal worth roughly $40 billion. This year, Exim and the Development Finance Corporation also signed an agreement to finance up to $4 billion for another Polish project that could support the U.S. export of GE Hitachi's SMR. A similar expression of interest for financing Romania's adoption of NuScale's advanced nuclear reactors was put forward at this past weekend's G7 leaders meeting. Unfortunately, this type of coordinated effort across U.S. federal agencies is the exception, not the rule. Representatives Donalds and Clyburn have introduced their International Nuclear Energy Act to enhance our competitiveness via a comprehensive civil nuclear export strategy. If we better leverage existing tools, enact these new policies, our all-of-the-above clean energy strategy will reduce global emissions. If the World Bank and other IFIs reassess their nuclear energy policies rather than simply defaulting to no, we'll be on a clear path. Thank you again for the opportunity to testify. We're eager to assist the committee in ensuring the U.S. regains its leadership in international clean energy.
Thank you, Mr. Powell. Dr. Semban, you're recognized for 5 minutes.
Thank you very much, Chairman. Good morning, Chairman Lutkemeyer, Ranking Member Betty, and distinguished members of the Financial Services Subcommittee on National Security, Illicit Finance, and International Financial Institutions. I thank you for inviting me today to testify at this hearing on international financial institutions in the era of great power competition. Before I begin my testimony, Mr. Chairman, allow me to pay tribute to the memory of music legend Tina Turner. We in Africa mourn her loss together with America. My name is Dauda Semban, and I am a distinguished non-resident fellow at the Center for Global Development and the founder and CEO of AfriCatalyst, a global development advisory based in Dakar, Senegal. I'm a former executive director of the International Monetary Fund, where I represented 23 African countries on the executive board. And during my tenure, I chaired the statutory IMF Executive Board Committee, which is responsible for strengthening collaboration between the IMF and other multilateral organizations, notably the World Bank, the United Nations, and the World Trade Organization. Today, I would like to focus my testimony on the potential implication of the relationship between the United States and China at the World Bank and the International Monetary Fund. In addition to my written testimony, here are the key messages I would like to convey. First, I agree that the United States should constructively engage with major shareholders of the World Bank and the IMF and other IFIs, including China. This is important to enhance the ability of these multilateral organizations to help formulate and advance an ambitious shared agenda for supporting demands from their members and the global community. Second, when playing out within IFIs, great power competitions runs the risk of undermining the performance and effectiveness of these institutions, including by weakening their governance framework, complicating the consensual identification of their priorities, and reducing their resource mobilization potential. Therefore, I believe that the US policy on IFIs may have significant negative implications for these institutions, the world community, and the developing world if shaped by a non-cooperative stance with China. Third, there is a strong case, in my opinion, for the United States to use its leverage and influence to enlist IFIs in implementing US-led infrastructure development initiatives. This is in the best interest of both the United States and African partners, and its African partners. Closing the infrastructure gap is critical to fostering growth, reducing poverty, and enhancing the delivery of social services in Africa. But it may also be quite effective in advancing the US foreign policy objective, creating opportunities for US private businesses, and strengthening economic and commercial engagement with the continent. Finally, I will conclude by emphasizing the unique responsibility of the United States for ensuring that MDBs, multilateral development banks, such as the World Bank, are adequately endowed with necessary resources to fulfill their mandate. This includes providing timely and adequate funding to IFIs and contributing to capital increases. In this connection, I certainly agree with Ranking Member Beatty on the need for significant US funding to IFIs. I also believe that capital increases for MDBs should be motivated by efficiency considerations and the need to optimize their ability to meet demands from countries and the international community. Thank you for your attention, Mr. Chairman.
Thank you, Dr. Sambeni. Fascinating discussion. Thank you all for being here this morning. Excellent testimony. With that, we'll turn to the members' questions, and I'll recognize myself for 5 minutes. In my opening statement, I referred to the GAO report, which I have here, and we'll enter the record without objection. It was issued this month earlier, and it reveals staggering inequity in the values of contracts that the World Bank has awarded. All of you, or most of you, have referenced this report this morning with what you've been telling us. And so, despite the U.S. being the largest shareholder and contributing member to the World Bank, the U.S. business saw measly 2.4% of overall contract awards, while Chinese companies were awarded over 92% of all contracts. It's very disconcerting to see that not only some of this money going to Chinese companies that are on our U.S. entity list or sanctions list because they pose a significant risk to our national security, but there's also the discussion about whether they give the quality of construction and where the dollars are actually going that are of concern as well. So any of you that like to take that question to begin with, where do you see this going? How do we keep our funds going from these international financing organizations to the Chinese to then be able to go out and loan the money at a higher rate of interest to other developing countries whenever they really don't even qualify for some of these dollars themselves? I know several of you started to talk about this. Dr. Schroeder, you want to start out the discussion on that this morning?
Sure. So thank you very much for the question. So in my view, the most important part of allocating contracts is to go to the most efficient producer, because fundamentally the challenge with multilateral development bank lending, regarding procurement, is if a project is produced over budget or inefficiently, it becomes harder and harder for the recipient country to return the funds. I can't speak specifically to the procurement process that led to selecting China or the United States, but fundamentally allocating projects to the most efficient contractors is an important part of fostering the repayment ability and the efficiency of many of the MDB projects.
Mr. Rundy.
Thank you, sir. I think one issue is there's been a change moving away from the concept of a low bid to a concept of quality and life cycle cost. I think that's something we want to have across the developing world.
You say there is a movement, there is a movement to do that?
There's been a shift. The World Bank Group is sort of the standard maker in developing countries in terms of how countries buy stuff. And historically, the standard playbook was buy low bid. In the last several years, there's been a movement to attempt to move to quality and life cycle cost, and the World Bank changed the rules to allow that as a concept. We ought to be investing in training procurement officials in developing countries to have the concept of quality and life cycle cost as an approach to buying things. I know this seems a little bit obscure, but it's a really important issue. I think the other thing for us is, as the United States, we need to show up in a lot of developing countries, and sometimes some of it, so I'm not excusing the fact that China's winning all of these contracts, but it may also be a function of we need to encourage American business to go abroad in different ways, whether through foreign and commercial service or whether it's so we can do certain things through the executive director's office at these regional development banks to encourage American businesses to look at opportunities through the MDBs.
Mr. Powell, follow up on that. It's concerning to me because a lot of the money going to these Chinese companies, they're nothing but shell companies. I mean, I served on the China Select Committee, and we had a whole bunch of them, over 1,000 of them on the exchange for a while. We put some qualifications in place, and suddenly a bunch of them dropped off. It's down to like 257 now or something like that. And so basically there were shell companies that allowed the money to flow through them to the Chinese Communist Party. So these companies that are getting access to these dollars at the World Bank, are they the shell companies, or are they for real companies that are there in China? Are they just another extension of the China Communist Party?
Well, I'll say at the top, we just need to get a lot tighter on the requirements around these bids, both to Dr. Schrager's point that there's much more transparency about who actually is bidding into this, how the financial flows are going. We also need to be much clearer about whether we're, by frequently going with the lowest bid, if we're always preferential to heavily subsidized bids, right? We shouldn't be looking to always go with things that are then heavily subsidized by Chinese state-owned enterprises. The one other thing I'd note is in the instances where we do compete in these bids, we've got a great track record of winning. American companies have a great track record of winning. But some of the areas that we're most competitive, I'll just go back to our energy exports, our advanced nuclear technologies or our clean fossil technologies, those are just off the table at the bank and many of the other IFIs. And so we're effectively saying we can't compete for many of the most interesting.
Thank you, Mr. Powell. With that, we recognize the ranking member, Ms. Beatty from Ohio, for 5 minutes. Thank you.
Thank you, Mr. Chairman, and thank you for bringing your expert information to us. All of you have basically mentioned how the United States needs to strengthen our role, or how we should try to maintain and not let others like China, i.e., have a larger percentage of interest with IFI. Also, I want to thank you, Dr. Saimban, for recognizing and saying that we need to strengthen social services and how important our infrastructure is. I agree with you as we look internationally, the same as we're trying to do here in the United States, because infrastructure plays a major role in what we're discussing today. So let me start with you, Dr. Saimban, and I'd like to start with the implications of the United States defaulting on its debt. I have a difficult time trying to separate where we are now and what we should be doing. We know that such a disaster would have a catastrophic consequences in the United States economy and spread throughout our global financial system. Is there anything you can lend to us with advice on how a default would affect other countries around the world and the international financial institutions' abilities to help countries in need?
Well, thank you very much for your question, Ranking Member Betty. I do fully agree with you that the potential debt default of the U.S. would be actually having dramatic consequences, not only for the US, but certainly also for many developing countries. As far as I know, for African countries that are borrowing from the markets, such an event might actually worsen the difficult tightening of financial conditions that they are facing right now, which would actually contribute to sort of undermining actually their access to markets, but most importantly also increasing debt servicing, which is already a problem in many countries that are facing a high level of debt. That's for one. I think another issue also is that event would, according to the IMF, actually have major consequences on the stability of the international financial system. And if that was to ever happen, I think that would be actually quite catastrophic for not only the global economy in general, but economies in emerging markets in developing countries. And certainly this is something that might end up actually having a lot of consequences, including not only on weakening growth prospects, but also having an impact on poverty, having an impact on the ability of international financial institutions to support those countries. And I believe that would be not necessarily the ideal situation. Thank you.
Thank you so much. Mr. Powell, we have all talked about, or all of you all have talked about the value of our stability in different ways and the impact that the United States should have on staying strong and fighting against China. Can you comment on the impact of the United States debt default of great power competition, particularly focused on the United States' ability to compete with China on the global stage and preserve its current standing in the global economy?
Obviously, the United States should not default on its debt obligations. There has to be a short-term strategy and a long-term strategy for that, which also needs to bring our spending into long-term, much more sustainable alignment, so that this does not remain a perennial issue.
Thank you, and I certainly agree that we should not be held hostage and have a ransom note of being able to turn our backs on those who also need our assistance. Let me move on and say first, thank you to Dr. Sambane for also recognizing the great talent of Tina Turner. That's very much appreciated. And I know in many countries in Africa what she meant to all of us. I'm probably not going to have time to have you answer this question, but being very impressed with your work and what you've done with the IF. I also have an interest in some of our close countries like the Caribbean. After being at CARICOM with then Chair Waters, we heard a lot about those lower income countries, and I will offline with you because my time is up. I yield back what I don't have.
Gentle Lady yields back. They have called votes. We do have a screen here of where we are with our votes. We're going to try and get at least two more people in, Mr. Barr and Ms. Waters, before we adjourn. And if they're a little slow getting to the floor, we may get in another one. But we appreciate your indulgence. With that, we recognize the gentleman from Kentucky, Mr. Barr.
Thank you, Mr. Chairman. Thanks for the hearing. Thanks for the excellent testimony from our witnesses. So let me just quote from Mr. Powell and Mr. Rundy, our excellent witnesses here. Since 2000, China has become a dominant player in global energy finance, issuing more than $234 billion in loans for energy projects to some 68 strategically significant nations. For perspective, from 2016 to 2021, China provided more energy project financing around the world than all major Western-backed development banks combined. That's stunning. What I would like to know is, so the World Bank has this green agenda, and they're refusing to fund some of the most productive and lowest cost zero carbon energy sources like nuclear energy, or by supporting the mining of critical minerals necessary for these so-called green technologies. It seems as though for every World Bank fossil project turned down, China comes in with a bilateral loan, including for coal. So Mr. Powell, Mr. Rundy, can you touch on how the World Bank's green energy policies promote China's reach into the energy space?
I'll go quickly just to reiterate a few points on this. First, by the World Bank and IFIs effectively refusing to finance both nuclear projects and clean fossil projects like import of LNG technology or carbon capture technologies in places like South Africa that could desperately use them, we're opening a huge window to Chinese competition and frankly to Russian competition, particularly in the nuclear space as well. And we're holding back the export of U.S. clean technologies. I will totally reiterate Mr. Rundy's point about critical minerals as well being an urgent priority and very much off the table for many of these institutions.
Thank you, Mr. Barr. I think the MDB should have an all-of-the-above energy policy. I think it's a mistake. I disagree with the Biden administration on holding back on supporting oil and gas projects. Unfortunately, even when the Trump administration, when we pushed for supporting oil and gas projects, we would get voted against. The Europeans would vote against us at the board at the MDBs. So we're going to need to create a new coalition to support a diversification of energy. It's hypocritical of us when we have oil and gas and coal in this country, and then we turn around and tell developing countries they can't develop their own energy sources.
And we're playing right into China's strategy.
And absolutely.
So we have to use all of our influence to alter these policies at these international financial institutions. How do we end China's eligibility to borrow from the World Bank?
So the Asian Development Bank has said they're going to end their eligibility by 2025. We should absolutely hold them to that. There is a temptation for the World Bank and the Asian Development Bank to continue to loan for a couple of reasons. One is they say, well, this is a window into how we can understand China better. There's lots of other ways to understand China better. Or this is a way for us for a bunch of lending reasons that they do it. You all have the power of the purse. You have an ability. You should have blunted conversations with the administration about this. I suspect it's an open door, but it's going to require, I think, some pushing from Congress. I would encourage this committee to push the administration on ending lending to China.
Yeah, we need to do that. I don't know which witness is the right person to answer this question, but jump in, whoever. The U.S. dollar remains the dominant reserve currency with about half of all international trade invoiced in U.S. dollars, half of international loans, global debt securities denominated in dollars. At the end of 2022, the dollar accounted for 58% of all allocated reserves globally. But we hear a whole lot about China's pursuit of a digital yuan. We hear a lot about the rise of crypto. We hear a lot about BRICS, a new potential multilateral currency developing. We hear about the Saudi deal with China denominated in the sale of oil in the yuan. Can someone talk about the threat to the dollar's reserve currency status?
Sure. I'm happy to start on this. So fundamentally right now, the renminbi it's not yet positioned to compete with the US dollar for a number of reasons. First and foremost, the reason that the dollar plays the role it does in the international financial system is it provides the global safe asset. You're confident, except for the upcoming debt ceiling, that you will always be paid back if you own US dollars. That's fundamentally what you know. When you contemplate investing in China and holding Chinese renminbi as reserves, you're not necessarily sure that you're going to be able to turn that piece of paper into the goods and services that you need or intervening in FX markets.
Fascinating discussion. I hope that another member will ask a follow-up on that. And Mr. Rosen, you have a chance at that point to make a comment, okay? We need to continue on. With that, the gentleman yields back. We recognize the ranking member of the full committee, Ms. Waters from California. 5 minutes.
Thank you very much, Mr. Chairman. I will direct this question to Mr. Samban. You were previously executive director at the IMF, representing 23 countries in Africa. So you are keenly aware of how China has been making significant investments into infrastructure of several countries in Africa. And of course, they've been doing this in the Caribbean, but I'd like you to continue to elaborate on the growing presence in Africa. I mean, it is profound. Could you help us to understand what is going on in these countries?
Thank you very much, Congresswoman. On this issue, I would fully agree with what Mr. Daniel Runde said at some point. If the U.S. doesn't meet the hopes and aspirations of the developing countries, they will certainly look for alternatives. And alternatives are not only provided by China, of course, they are actually great ones, but they also provided by private sector also. And what is happening is, unfortunately, they have to do that and then, I guess, face much at a very expensive cost, in the sense that commercial borrowing is is very, very high. So what, in my sense, China has been doing is to respond to a critical need from Africa, which is the need for developing infrastructure. Infrastructure is found to be extremely important for fostering economic growth. It is extremely important for also improving the daily lives of African people by, whether we are talking about energy infrastructure or water or airports, all of that are critical, and Africa needs that. Unfortunately, they could not get those infrastructure from IFIs, or actually little of it. So, of course, they had to go and look for other alternatives, and China has provided that opportunity for many African countries.
Would you agree that our presence in Africa is less now than it was some years ago when we had Andy Young and some people paying attention to Africa, who was our ambassador to Africa? Do you see that we don't have a presence there much anymore?
Well, I would not say that you don't have a presence there, because I'm not going to comment on the diplomatic side, but on the economic front, what I can tell is, of course, the countries like China has been actually gaining a lot of influence in Africa, because, as I said earlier, there was a void, a gap to be closed, and they actually jump on it. Now, of course, the U.S., in my opinion, has been leading some very important infrastructure development initiatives. Recently, we're just hoping that they're going to deliver on those initiatives. If they do, I believe actually there is a really actually ample room for the U.S. to gain more from the African side.
Thank you. I'd like to say a word about the Caribbean. The Chinese are absolutely taking over the entire Caribbean. I know a little something about it. Ms. Beatty just mentioned that we were there not too long ago, and my husband served as ambassador to the Commonwealth of the Bahamas. And let me tell you, I just put together a few things that we've paid attention to over a dozen years. $30 million they paid for a stadium, $3 billion for a port, $40 million for another port, $54 million for a highway, $3 billion for a hotel, and another $250 million for another hotel. The whole footprint has changed in the Bahamas. Now, I want you to know that they have some needs. They have these hurricanes, and each year they're trying to pay to restore, their infrastructure. And so they get way behind. In 2019, in the Grand Bahamas, they lost their only hospital, and they're trying to build a hospital. We are not paying attention. The Chinese said, we'll build it for you. And when we were there, they were making a plea to us. We don't want to be indebted because we are already indebted. Can't you guys help us? I'm so pleased for this panel today because you're absolutely identifying the growing strength of China and its influence. And those people who love us and want to be friends with us, they're losing the ability to do it because we are not paying attention. So I thank this panel so very much for what you're sharing today, because these multilateral development organizations must be supported so that we can use our influence and keep our friends by helping them out and dissuade them from taking all of this from China, because they'll be indebted forever. I yield back.
Gently yields back. With that, we, as you see over here on the left, our left, there's a screen that tells you where the votes are. Magic number is 100, so it looks like we've got about 5 minutes to go with one more questioner. That'd be Mr. Williams from Texas. At that time, we'll probably take a short recess. Mr. Williams from Texas, you're recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you all for being here today. I want to follow up a little bit on what my colleague, Congressman Barr, was asking Mr. Schrager to you. What is China doing to undermine the dollar's dominance as the world's reserve currency? And what should we in Congress and the administration do to combat it?
So first and foremost, thank you for the question. But first and foremost, what China is trying to do is essentially convince countries around the world that the renminbi is an alternative asset to invoice your trade and to invest in. And so on the investment side, they've been working very hard to actually allow in foreign capital, so encouraging foreign central banks to hold renminbi-denominated bonds as their reserves. And on the trade side, they're encouraging firms to invoice, basically price their goods in renminbi. There's a few areas in which they've had challenges there. So first, we actually don't know who are holding most of these renminbi-denominated assets. What you can see is after the U.S. sanctioned Russia back in 2014, it was the Russian central bank that effectively announced they were moving out of U.S. dollar-denominated assets and into renminbi. So they did that publicly. And so, China has effectively been trying to attract foreign capital of that form. And a lot of the reasons for that is that China finds itself vulnerable in the dollar-based financial system. And so what I would say the fundamental area in which the United States can assure the dominance of the dollar is making everyone understand that U.S. Treasuries are the world's safe asset, that there is no state of the world in which the United States can or will default.
It all gets down to selling, doesn't it? All gets down to selling, doesn't it?
I'm sorry?
Well, just promoting yourself. Talking about we need to do our job to make sure the world understands.
I would say so.
Right. Next, I'd like to ask, global interest rates have risen at the fastest pace in decades in response to high inflation. And as rates rise and the global economy slows, countries of poor creditworthiness face significant debt distress, and China has been unwilling to work with the IMF to restructure debts owed to them because of their desire to protect their country's credit rating, meaning that these emerging market economies are in serious jeopardy. So because the IMF has not been able to rein in China and their abusive lending practices, the Chinese have increased their own emergency lending and pose a great threat to the world economy. Mr. Rosen, how could the IMF address the pressure from rising interest rates, and how can the U.S. and the IMF better hold China accountable?
Thank you, Congressman. I think that's an important question. China is basically holding up the business of the IMF right now by not permitting these debt restructurings. They are basically, sometimes they indicate that they will agree to the debt restructuring. When you get into the details, they refuse to do so, as they have done in the case of Zambia. And then they ask the IMF and the World Bank themselves to take write-offs, which the multilateral institutions have never done. And it's completely wrong for the China to ask these institutions to do so, because they're already providing concessional lending at much lower interest rates than market rates. So it would be completely undermining and threatening the future of these institutions if they were to take debt write-offs. And I think the Chinese understand that, but they continue to push for it. I think what we need to consider is, first of all, we need to put enormous pressure on China with our European allies and others, all our allies, to agree to debt restructuring. But if they refuse to do so, then we need to look at a policy that the IMF does have in its toolkit, which is called the lending into arrears policy, which I referred to earlier, which basically means that we go ahead and we the IMF agrees to lend to a country in debt distress, and on the condition that it does not repay China with any debt or lending they get. Now, that's not a perfect solution, because unfortunately in the case of Suriname last year, my understanding is that we agreed to that Suriname agreed not to pay China, but they went ahead and by mistake apparently did pay China twice. So we need to work on mechanisms to prevent these countries, if they agree to it, to not pay China going forward. But I think that's one way that we can put more pressure on China in these situations.
Okay, I yield my time back. Thank you very much.
Gentlemen yields. We are getting close to the number over here. What we're going to do is recess. We have 2 votes. It should take about a half an hour, roughly, for us to walk over to the Capitol, cast a vote, and or 2, and then come back. With that, we'll have a short recess. If everybody can take your seats, we'll be ready to go here in a minute or two. We've got some members on both sides, so we can begin again. Where's Nickel from? North Carolina. Sit there for half an hour and I was not ready. We'll call the committee back into session, and with that, we'll begin our questioning. Thank all of you, your witnesses, for indulging us in conversations, both to, from, and on the floor. You guys have been very impressive. Lots of folks have really, really enjoyed your testimony, so thank you so much. Keep up the good work. And with that, we recognize the gentleman from North Carolina, Mr. Nickel, for 5 minutes.
Thank you, Chairman Lukemeyer, and thank you to our witnesses for joining us today. Dr. Saimban, Ukrainians have worked tirelessly to repel the unprovoked Russian invasion that Vladimir Putin started over a year ago. As they continue to fight to keep their country free, we need to support them, which is why congressional Democrats passed legislation that directed the U.S. Department of the Treasury to use the voice, vote, and influence of the U.S. at the IMF, the World Bank, and other relevant MDBs to advocate for the immediate suspension of all debt service payments owed to these institutions by Ukraine. Dr. Saimban, how else can the U.S. best support Ukraine during this time, leveraging its role at the World Bank and the IMF?
Thank you very much, Congressman Nickel. My sense is the best way for the United States to support Ukraine and other allies is to empower IFIs by giving them the necessary resources they need to extend support to those countries. And I would certainly think that there are at least a couple of ways to do it. Whether we are talking about the World Bank, it would be for the US to really be ambitious in providing financial contribution to that institution. So in turn, it can be actually in a position to support Ukraine, African countries, and other developing countries. This is critical. If we don't have that, the World Bank would be in very serious difficulty to deliver that mandate. The second ways to do it also is for the US to also support potential capital increases when they are needed. I'm not saying it's needed now at the World Bank, but whenever it is needed, it is the responsibility of the US to really make sure that those capital increases happens. And certainly that would be helpful to Ukraine, but not only to Ukraine, but also all the developing countries that this institution is supporting.
Thank you. Dr. Saimban, again to you. Russia has historically exported various goods and commodities to developing countries around the world. Ukraine, too, was a contributor to the global food supply. Russia is still exporting grain and fertilizer worldwide, including grain and fertilizer stolen from Ukraine. How might the international financial institutions help countries to diversify away from Russian commodities, such as grain and fertilizer, and what else is needed to support the IFIs in these critical endeavors?
Thank you, Congressman Nickel. I'm glad that you're asking this question. I think one fundamental ways that the US and IFIs can really help developing countries in general have the opportunity to access grains and other agricultural commodities is to really help those countries in their efforts to promote agricultural transformations. And that requires making a lot of investment in this area. The US has announced a partnership on food security with Africa last December on the margin of the Africa-US Summit. This is very much important that actually the U.S. implement those type of partnership by making sure that they support those countries in mobilizing the necessary resources they need to invest in agricultural transformation. That would be a very good way to provide alternative sources of grain consumption for those countries.
Thank you so much for your answers. Mr. Chairman, I yield back.
Gentleman yields back. With that, we go to the distinguished gentleman from Georgia, Mr. Loudermilk, for 5
Well, thank you,
minutes.
Mr. Chairman. Thank you all for being here. It's a very interesting conversation we're having here. And Professor Schrager, one of my colleagues earlier asked you about the effects of a U.S. default, what it would have on emerging markets. And I think you answered that appropriately, as everybody agrees. It would have a devastating effect on U.S. economy, which it would have an effect in other markets as well. I just want to state for the record that we're taking that very seriously. It's interesting that my colleague from the other side of the aisle asked about something that we have already taken action on here in the House weeks ago, and we're still waiting on the White House and the Senate to actually move forward with it too. So just want to mention that for the record, that it was interesting that that question was asked from the other side when we are actually taking this very seriously. But there's another issue that wasn't asked. It's sort of relative, and I want to get your opinion on it, is regarding the record high inflation that we've seen, that directed by driven by the spending that we've had over the past 3 years. And how is that, these record high, this inflation, how has that affected other countries' borrowing costs?
Sure. So thank you very much for the question. So the way in which U.S. inflation has primarily affected other countries' borrowing costs is actually in the Federal Reserve's reaction to it. So fundamentally, every country around the world that borrows in U.S. dollars, they're always going to have their bonds priced as a spread to the risk-free rate in dollars, which are U.S. Treasuries. And so as the Federal Reserve moved to raise interest rates to combat inflation, you can think of countries around the world that not only have to pay the U.S. Treasury rate, which is going to go up with interest rates, they're still going to have to continue to pay that spread above U.S. borrowing costs. And so as the U.S. moved to combat our own inflation problem, it's led countries around the world to also have to pay a higher interest rate on U.S. dollars.
So with that, does this create a risk for us that may push other markets to, let's say, the Chinese renminbi? Is that something that we could be facing that pushes these emerging markets to another lender?
So I think that the challenge there is most countries still, actually one of the things you see is other countries are very reluctant to denominate their debt in Chinese renminbi, primarily because there isn't a large liquid investor base that will purchase the bonds. And so even though hypothetically, Chinese government bonds are going to pay a lower interest rate than U.S. Treasuries, Chinese government bonds in renminbi than U.S. Treasuries in dollars, there still is not really a large market for governments to issue their bonds in renminbi the way that there is for U.S. dollars.
Is there a critical point as far as an interest rate that would overcome that? In other words, that would force them to go?
So I think in some sense, I think the real way in which people start being able to issue and borrow in renminbi is when people start thinking in terms of the goods that they need to buy and consume are in renminbi. Fundamentally, most countries around the world, if they issue a bond in renminbi, the calculation they have to do is then, okay, I'm going to take my renminbi and convert it into US dollars to buy the thing in which I need. And so while actions in the U.S. financial system are certainly going to affect other countries' decisions to borrow in renminbi, the kind of underlying challenges in Chinese financial markets and fundamentally the lack of goods priced and sold in renminbi are going to continue to hold back kind of a growth of this market for a while. And in particular, the fact that many countries are reluctant to try to raise money inside of China's liquid onshore capital markets for effectively fear of capital controls. If you've raised renminbi in China, you can't get that out into your projects the way you can if you raise money in the US in dollars.
But it would be safe to say that if the Treasury Department were to reverse this path and start lowering interest rates, it would reduce any risk. of using China over U.S.?
I guess I think the fundamental way in which the U.S. can, I think that I wouldn't say that I wouldn't recommend that the Federal Reserve stop trying to combat inflation in order to think of other countries' borrowing costs. I do think there's going to be interaction, but I don't have a strong view on that now.
Okay, thank you. Well, with the time that is quickly running out, I'll submit the rest of the questions for the record. Thank you, Mr. Chairman. I yield back.
The gentleman yields back. With that, we go to the gentlelady from Texas, Ms. De La Cruz, for 5 minutes.
Thank you, Chairman Luetkemeyer, for holding this hearing today. Well, I appreciate my colleagues' many concerns over China's role in international debt challenges that are currently faced. And its attempts to reshape the international financial system. I want to start my time a little closer to home. I represent a congressional district of 15 in Texas, and that is along the U.S.-Mexico border. It includes McAllen, Texas, the most southern tip. It's also over 80% Hispanic, one of the most Hispanic districts in the nation. For our community, the border presents its own challenges in our everyday life and plays a significant role in our life. That being said, I would like to talk about the most important international financial institution in my district, and that would be the NADBank, the North American Development Bank. NADBank has supported nearly 300 infrastructure projects benefiting nearly 20 million people along the southern border, providing basic yet critical services like clean water and waste disposal. The last time Congress addressed NADBank was in the North American Development Bank Improvement Act of 2019, which became law as part of the implementation of the USMCA. Mr. Rundy, you've advocated for updates to NADBank's mandate, including extending the current project radius limit beyond 62 miles. Do you still support extending the range of NADBank's operations, and what other steps should Congress take to consider enhancing NADBank's work along the U.S.-Mexico border?
Congresswoman, thank you for that very important question, and I wholeheartedly agree. We have a shared future with the Western Hemisphere, and we need to offer a positive agenda for our friends south of us. And I think that the NADBank is an important instrument that could allow us to do many of the things that you're talking about. I would like to see us expand the range of activity to the NADBank to all of Mexico, especially southern Mexico, which is the poorest part. And I'd like to see it expanded to the northern triangle of Guatemala, Honduras, and El Salvador. We have a lot of folks who migrate. I think the NADBank could do a couple things for us. I also think it ought to expand its activities beyond environmental and basic infrastructure improvement. It could be an infrastructure finance vehicle for Mexico and Central America, including energy. And two things. One is, in the case of Mexico, we want to offer our friends and our friends and neighbors in Mexico to expand options other than options that aren't necessarily the most constructive economic options, let me put it that way. But also, secondly, we want to find ways for people, especially in the Northern Triangle, to make a lives where they were born and where they grew up. And when a country hits $8,000 per capita, Congresswoman, people stop migrating. People would rather stay where they grew up. They only leave because of oftentimes either violence or because of lack of jobs. So I think strengthening the NADBank, giving it a larger range and giving it a larger set of activities that it could take on could be a really interesting instrument to responding to the challenges of migration and to respond to some of the challenges related to the violence that we're seeing in Mexico. Thank you very much.
Similarly, it is my understanding that the U.S. Border State Representative on NADBank's Board of Directors is currently vacant. Is that still correct?
I do not know the answer to that. If it's vacant, that would be a problem. I think we should have across all of our multilateral institutions, including the NADBank, we need to have people minding the store. And it's part of our leadership. Part of our leadership is just minding the store and keep making sure that things are going the right way. So if that's not been filled, that needs to be filled, Congresswoman.
Thank you. With that, I yield back.
Gentlelady yields back. With that, we recognize the distinguished gentleman from Iowa, Mr. Nunn, for 5 minutes.
Thank you, Mr. Chair, and I appreciate you putting this together. I think, team, we all are familiar with the situation called the Coda Sinclair Dam in Ecuador. We know that in 2019, Ecuador defaulted on its loan, and it received this loan from the China Development Corps, forcing the country to renegotiate with the Communist Party in Beijing and making cuts to its budget, damaging Ecuador's credit rating and making it harder for the country to borrow money both in the future as well as putting it in a position where it is now beholden to Beijing. So the question, Director Rosen, I'd like to direct towards you is, when we're looking at unfair global financing protocols, can you please speak to ways that China is manipulating the international financial institutions and why they're continuously allowed to cheat the system?
That's a good question, Congressman. I think they are partly, I think they have these vast loans that they make to these countries. I think there's definitely evidence of corruption in the way that they make these loans. Unfortunately, emerging market countries, as I mentioned in my testimony, suffer a lot of corruption in their governments and elsewhere. And so they are easy prey for Chinese corrupt behavior. And I think a lot of the problem lies with the fact that these countries are not attractive places for the private sector to invest in, because they don't respect private property, and they are corrupt. And that obviously makes them, in many cases, off limits to US private sector investors who are...
But not off limits, you're absolutely right, to the Chinese.
They're not off limits to the Chinese.
And unfortunately, the Chinese, as you mentioned in your opening, the DBRs, the Doing Business Report, in this case, China has largely manipulated their response back to it, providing a false sense. Is that correct?
That is correct. That is correct, and it's very concerning.
So, Mr. Chair, this is my concern as well, that China is exploiting the system. They're exploiting the countries. The IMF largely is backfilling this situation, and at the end of the day, U.S. taxpayers end up on the hook for paying for a lot of this. The overall concern here is that Belt and Road, while good for China, really is all roads lead to Beijing. And that should be a concerning situation for all of us. Dr. Slager, I want to speak to you then on why China is allowed to borrow so heavily from the International Bank for Reconstruction and Development when it clearly does not meet the borrowing criteria. Yeah.
Congressman, I'm happy to take that.
Absolutely.
I think there's, as I mentioned in my testimony, I think there's a temptation in the case of the Asian Development Bank and the World Bank, the IBRD, which is the technical term that you're using, and you're correctly using it, Congressman, for two reasons. One is that, for three reasons. The first is that they want to have a kindergarten office for their leaders, so they kind of like grow up in the system. It's like a starter director job. So they keep the office open, just like in other bureaucracies. It's like, we have a China office, it's a plum post. So part of it's bureaucratic politics. Second is the issue of, I want to have a window into China because they're so interested in China. Well, China can pay for a lot of the advice that they want from the World Bank Group. They don't need to borrow money from the World Bank. But the third reason is, the business model of the World Bank is they lend money to richer countries with a pretty good credit rating, and then they cross-subsidize that by lending to poorer countries with a poorer credit rating. My view is China can finance its own development. We should stop this practice and I think the Asian Development Bank has sort of gotten the memo, but the World Bank has not fully gotten the memo. And they'll give you kind of World Banky answers to this sort of thing. We got to stop it.
Mr. Wright, could not agree with you more. And you highlighted earlier, by 2025, China should graduate from this program. I'd offer that 2025 is 2 years too late. We can start funneling them off that now.
I agree, sir.
I think you're in the right spot. Thank you. With the time I have remaining, I do want to ask you, you brought up an interesting proposition of including Taiwan in this. It's because the United States is the largest contributor to the World Bank. We should have also a voice in where this goes. And so, Mr. Chair, I want to highlight here that the United States has issued sanctioned export controls against countries that the World Bank has awarded over 28 contracts to. As was highlighted earlier, these things include the Three Gorges Dam, the South China Seas, the Bishar Nuclear Power Plant, the Long March rocket family. Time after time, U.S. taxpayers are financing operations that the Chinese are taking for themselves. How do we get them off this? Jerome, I'll let you have the last word.
Ultimately, we need to find ways to figure out the sanctions list. They will say, well, we use the UN sanctions list and we can't put them on the UN sanctions list. And so I think, anyways, I'll stop.
Yield back my time and I'll submit the rest of my questions off the record. Thank you, Mr. Chair.
Gentleman's time has expired. With that, we go to Mr. Muser from Pennsylvania, who's recognized for 5 minutes.
Thank you, Mr. Chairman, and certainly thank you to all our testifiers. It's extremely interesting and important hearing we're having here. So the U.S. president just came back from the G7 summit. The G7, of course, wields enormous power on the IMF and the World Bank, and yet we're seeing in this hearing that China is taking extreme advantage of both institutions. It's unclear if the administration is asleep at the wheel, frankly, and it also seems very unlikely the subject was brought up at the G7 summit by the Biden administration. So, Mr. Rosen, you had represented as the executive director of the IMF. You represent the United States. You said in your testimony the IMF is straying from its core mission. The IMF is pursuing initiatives such as swapping debt for climate pledges and adding in climate reforms as part of their terms for financing loans. This is very troubling. What do you think we should be doing about it?
Well, I think, Congressman, we need to hold the IMF to account. They have a core mission, which is, as the chairman said, as a firefighter in crises situations, and not to be providing development lending, which is what they're doing with this climate trust that they've established, and dealing with long-term problems. Their role is to deal with short-term crises, not to deal with long-term development issues. That's the role of the development banks, and importantly, bringing in private sector capital. Without private sector capital, these countries are never going to get out of their challenges and problems. And so we need to call the IMF to account and point out that it's
who's making these decisions? It is certainly not responsible use of IMF member funds to condition loans or forgive loans based upon climate change.
Well, when I was at the IMF, we opposed that, and we said we wouldn't support it in the administration that I was a part of. Now, this administration, unfortunately, is supporting those policies. That's
Thank you. Mr. Powell, is this money being well spent, in your view? You've got a background in clean energy.
First, thank you for the question. This is very important. A country that is in deep financial distress, or a global financial order in deep distress, is very unlikely to be able to form the capital to build clean energy at scale. So the first and highest mission importance of IMF is to serve this role as firefighter, preserve that role as firefighter. We have plenty of other institutions, plenty of other IFIs with a significant role in financing clean energy and energy infrastructure investments of all kinds. I would say keep IMF in its role, and that's its highest and best use, and take better advantage of the other IFIs as we develop clean energy around the world.
Makes a lot of sense. Thank you. Mr. Schrager, there's a lot of concern about how China is taking advantage of the loan forgiveness programs from the G7 to the Paris Club. These programs help countries, of course, trapped in debt to climb out of debt. Yet my understanding is that many of these countries are turning around and paying that money to China, who is demanding payment. Your thoughts on that?
So I think right now, where the situation China finds itself in is that it has lent a lot of money that it fundamentally expected to be paid back. And right now, it is trying the best way. It is basically trying to figure out how it can avoid recognizing the losses that the Export Bank of China and the China Development Bank actually faced. And so actually what you see is actually a very recent work by Carmen Reinhardt and Christoph Trebesch showing that what China is doing is actually operating as a global crisis lender to some of its own countries to effectively roll over those existing loans in order to avoid recognizing the losses. And so I think that in terms of moving ahead on sovereign debt restructurings, it's important to make sure that negotiations with China doesn't keep countries in kind of long-term limbo as they wait in order to resolve their debt crises.
Great, thank you. Mr. Rosen, so we think that China's perhaps profiting from the IMF, and yet at the same note, they want to increase their quota. We have a lot of evidence that there's manipulation taking place of their exchange rate, special drawing rights, things of that nature. I have a bill called the China Exchange Rate Transparency Act, which will bring a lot of demands, common sense reforms, if you will. Is our IMF director currently pursuing getting China to operate how other countries operate within the IMF?
I mean, it's difficult. I know the executive director. She worked for me as my deputy. She's a Treasury civil servant, and she's a good person, and she does understand the issues relating to China.
Okay, thank you, Mr. Chairman. I yield back. Thank you.
Gentleman's time has expired. With that, would recognize the gentlelady from California, Ms. Kim, 5 minutes.
Thank you, Chairman and Ranking Member, for holding this very, very important hearing today. I'd like to insert into the record a recent AP piece titled "China's Loans Pushing World's Poorest Countries to Brink of Collapse." The CCP is the world's biggest government lender to emerging economies, and at the same time, the biggest borrower and debtor of the World Bank. How can the CCP borrow at subsidized rates as a developing country and lend hundreds of billions of dollars to poor countries like a fully developed country? The CCP taps into IFI system, yet refuses to cooperate with the Paris Club to restructure the debt of poor countries. As the saying goes, the CCP can't have their cake and eat it at the same time. If the CCP wishes to be a responsible member of the international community, Xi Jinping must abandon his debt diplomacy. Mr. Randi, in your view, what more can we do in concert with our partners and allies to ensure that the CCP graduates from being able to borrow from the World Bank at subsidized rates?
Thank you so much, Congresswoman, for that question. We have been perpetuating a fiction. And that fiction is that China is a developing country. And they have used that fiction and taken advantage of privileges they should not be taking. They're the second largest economy in the world. They're a larger financier than the World Bank and the other MDBs. And they have been taking advantage through things like lower than market interest rates. And they get other sorts of privileges that go to developing countries. We need to work with our partners around the world to get them to stop declaring themselves a developing country. Right. So it's going to require diplomacy, but also some honest conversations with our Chinese counterparts. They're perpetuating a lie.
Correct. I mean, which is why I'm so pleased that we passed the PRC is not a developing country, because they are gaming the system using that special status. As part of its debt diplomacy and as a creditor, the CCP is pressuring borrowers to sever ties with Taiwan. And so I introduced HR 540, the Taiwan Non-Discrimination Act, to support Taiwan's participation in the International Monetary Fund. So, Mr. Randi, again, in your testimony, you stated that we should use the need for a capital increase at MDBs as a way to grant Taiwan membership to the IDB. So recognizing that Taiwan is a member of the Asian Development Bank, how would the international community benefit from greater participation of Taiwan in other MDBs?
Thank you so much. This is an important question, and I want to thank you for your leadership on this issue of Taiwan, Congresswoman. So it is true that Taiwan, as an economy under the formula of Taipei China, is a member of the Asian Development Bank since 1966. This is not a well-known fact. It is also a member as an economy of the WTO. Most of Taiwan's allies are in the Western Hemisphere. There is some talk about a capital increase for the Inter-American Development Bank or the Inter-American Development Bank's private sector arm. I'm supportive of both because I think it would be part of a new initiative to work in the Caribbean, to work in Latin America. We ought to have a capital increase. But that is a political deal, and Congress has a seat at that table. We should demand that Taiwan get a chance to buy shares in the Inter-American Development Bank, just as they do in the Asian Development Bank. In the case of the EBRD, Congresswoman, what happens in Ukraine is not going to stay in Ukraine. China is watching what's happening in Ukraine, and so we should hope that Ukraine delivers a historic victory against the Russians and against their illegal invasion.
Sure.
But when the reconstruction begins, we're going to need a lot of people to carry the burden. And Taiwan ought to step up and carry a very significant burden on the reconstruction. So one way they could do that, there is also talk about a capital increase for the EBRD. Under certain circumstances, I would agree with that. One of the conditions I would make is to say, well, we would like Taiwan to be a significant burden sharer in the reconstruction of Ukraine. One way to do that would be for them to buy into shares of the EBRD. So thank you, Congressman, for that important question.
Sure. Let me open the next question to anyone on the panel who has opinion on that. So please make your comments brief. With the CCP unwilling to restructure the debt of its borrowers, the IMF has been unable to deploy much needed capital to those countries. So in your view, how could we get the IMF to utilize its lending into arrears policy to circumvent debt provided by the CCP?
Congressman, may I answer that question? The answer is that they've tried it in the case of Suriname, didn't work very well. They need to review the mechanisms and impose true burdens on countries that breach that lending into arrears policies and pay China, even though they're not supposed to. There needs to be proper penalties against countries for doing that.
Thank you. My time's up. I yield my time.
Gentlelady yields back. The gentleman from Arkansas, Mr. Hill, is now recognized for 5 minutes.
I thank the chairman. I appreciate the committee letting me wave on for today's important hearing. I thank the panel for being with us, and this has been such a great discussion. And I concur with the questions of my preceding members. I looked at this recent GAO report that found that China is getting the lion's share of World Bank procurement, some 30%. That's 10 times more than the United States. And some of those contracts went to companies on the U.S. entity list, which seems just incongruent and insane to me. The bank says it doesn't follow the U.S. entity list, just the United Nations entity list. And Mr. Chairman, I'd like to enter in the record, China is using the World Bank as its piggy bank for the record. Mr. Rundy, how can we ensure that blacklisted firms don't make money this way?
Thank you, Congressman, for that important question. And I want to thank you for your leadership on multilateral institutions and on financial institutions in the Congress, Congressman. I would say a couple of things. One is that we need to encourage getting Chinese firms onto UN blacklists. Second, we also ought to be encouraging the World Bank to revisit its policy about what kind of blacklist that it's used. It just seems to me it's deeply offensive that companies that are on our entities list are somehow benefiting from World Bank contracts. It's deeply offensive. The other thing, Congressman, I would suggest is that we need to also encourage American businesses to do more and engage with the World Bank Group. It's not a cop-out in the sense that we should be encouraging American businesses, but we should absolutely be discouraging and preventing companies on the entities list from getting.
Well, I appreciate that. I think you'll find that a lot of American companies don't want to even go up and bid when they think the game's rigged. So thank you for that. You mentioned the EBRD and the potential capital request. I have concerns about their lending programs. They prohibit loans at the European Bank for nuclear. And when Speaker McCarthy and I were in Poland and Romania, they were demanding help to develop a clean energy nuclear plan. Do you think that we should hold up our support for a capital increase unless they change their lending parameters?
They ought to be able to finance gas. They ought to be able to finance big hydro, and they ought to be able to finance nuclear at the EBRD. And the reconstruction of Ukraine is going to require all of that.
Yeah, Mr. Powell, I'd like your view on that. Let me add that the World Bank has been more forthcoming on this topic, but that Brussels has just been absolutely against all of the above energy strategy, which is frustrating Central Europe, but I think now all of Europe, given the Russian invasion. Mr. Powell, what's your thought?
Well, first, I'm very thankful for your attention to this. Thankful that the U.S. Exim and DFC have at least partially filled in on this and are now supporting exports of U.S. SMR technology to both Poland and Romania. But tragic that there is not a U.S.-backed IFI that's willing to participate in this. I think using the moment of the capital increase is an interesting idea. Another idea has been proposed to try to get around this blockade from Brussels, which is, what if we were to establish a trust fund at the bank? This has been done in other instances, like for carbon capture and sequestration, and a topic not popular with Brussels, but we could establish a trust fund with like-minded other countries that are interested in the bank pursuing nuclear activities, and then they could also invest in the trust fund, and we could end run it that way.
Thanks for that suggestion. Let me turn to the IMF. I completely agree, Mark Rosen, with your comments that we need it as its strategic exchange stabilization approach for firefighting and not development. That's what the World Bank's for. I oppose the Resiliency Trust. I think it's a huge mistake by the current administration and the current administration of the IMF. This year, I believe we're supposed to reassess the basket of currencies for special drawing rights. Mr. Rosen, should China get a higher percentage of special drawing rights basket?
No, it should not, Congressman. I think it's not appropriate. China is not, the renminbi, as we've heard today, is not an international currency that's widely used, even though it's being more increasingly used, but certainly not widely used. And I don't think that that basket should increase.
Thank you. Well, I've introduced the SDR Oversight Act last January. I did it last year. I opposed these macro SDR allocations. I think it's a huge mistake, and I support Congress authorizing SDR allocations by the IMF. I think the IMF ought to change its bylaws on that, and I yield back, Mr. Chairman. Thank you.
Gentleman yields back. Well, that concludes our hearing. I'd like to thank our witnesses for their testimony. Thank you for their testimony today, and thank you very much for continuing to be a resource to this committee. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witness for their response. I ask our witnesses to please respond as promptly as you are able. This hearing is adjourned. You're welcome. Grace?